Hey, how's it going, guys? Rico here from Forever and Profit. I'm just going to bring you a quick little video. I'm going to run it down real quick. So here we are on the Euro 15-minute chart. I'm going to put in the 50 moving average and the 50 EMA. Make sure you insert it, right? You guys know how to do that. Okay, so 50 EMA aqua. I'm going to change it to aqua, right? You can change it to whatever color you want, but for the purposes of this video, I'm going to do it to aqua. Make sure it's exponential. My next moving average will be the 200 EMA. 200. It's going to be white. Let's see. White. Okay. So basically, I'm just telling you guys right now not to depend on the moving averages or any indicator. Market structure comes first and foremost always, but these are really useful to notice when they're going to do fake outs and stuff like that. So I'm going to be going over that. So look, this is the current week of Euro. I'm going to go back just a little bit to show you guys. So here we get a crossing of the 50 and the 200. Let me zoom back. We got our peak formation high, multi-session M, right? I can just tell. The high of the week's right here. So look, I'm gonna put a circle around. Okay, see where the crossing is? I'm gonna put a circle right there to indicate, to remind me that we're in a downtrend, right? They crossed down. So here, if you guys don't have the ellipse tool, then remove it. Show you guys how to put it. Okay, so you right-click up here next to your time frames. You're gonna right-click. Put customize, you're going to find the ellipse tool, insert, and then put close. So then I'm going to click the ellipse tool. When you set it, it's just going to look like a line like that, right? So that's the ellipse tool. You're going to have to double click it, and then move it like this. See how you can make a circle? Okay, so let me delete it. I'm going to put a circle around the crossing of the 50 and the 200, okay? So we got a crossing of the 200 and the 50, so that means we're in a downtrend. We came from a multi-session M, high of the week. We're looking for shorts now. Let me run down this real quick. Notice when they crossed, you're going to start looking for shorts, right? Of course, going in line with everything that we've been saying, the market structure, right? So yeah, you need to know your market structure. These are just extra confirmations. So I just wanted to run down real quick because people have been asking me about the moving averages. So they cross down. We're in a downtrend. Notice right here they start faking past it. Look, they try to fake past the 200. So when they fake past it, people put buys. Okay, so look, we're on a downtrend. They crossed. You see how they keep faking it? They keep hitting it right here. Look, let me put a little. Notice how they keep faking it. Look, they keep hitting the high in Asian, and then into changeover right here, they make a small M formation to the pins to the 200 EMA. You could just wait. I mean, if you guys are unsure, you wait for the uptrend. So right here, it's gonna keep dropping. End of the week. Say this is one I wanted to show you guys. I'm gonna be covering this week of Euro. Okay, so they set the high and the low. We got the purple lines are the first 8 hours support and resistance. You guys should already watch my other video, so you guys know what that is. Okay, so they set the low of the Asian session. They set the high of the Asian session. They break above it in London. In London changeover, the market maker had to hit the stops. Okay, so notice something right here. They break above it. They make an M formation. Let me zoom in. This is the start of the week, right? They break above the 200 moving average, the white, and they break above the support resistance bands that we have right from the first 8 hours of the week. They make an M formation, work the blue tracer. They make a railroad at the blue tracer. That means everyone had their stop losses right here. The blue tracer is yesterday's high. That's the high from Asian session from Friday. Right, let me zoom out. They hit the high, see? That's the high from Asian session. They break above it, make a railroad pattern, make an M formation, drop. Fake move start of the week. At the start of the week, they usually do a false move to induce people going the wrong way. So they break above it, make an M formation, drop. Notice something. The 50 and the 200 haven't crossed. They haven't crossed back into an uptrend. It looks like they're about to cross right here, right, with that rise. But that M formation made sure they didn't cross. So we're still in a downtrend. Right here, they drop. They drop from that M formation in London. New York drop all the way, small retracement, right? In the Asian session, notice something, they start working the 50 EMA. So these moving averages are pretty powerful if you know how to use them. We're on the 15-minute chart. Right now I'll show the 1 hour chart, and I'll show you guys something Marco pointed out. We're on the 15-minute chart, okay? So this is the moving averages. I like to use them on the 15-minute chart. You guys can practice on the other charts, but for now, For this video, we're doing it on the 15-minute chart. Notice right here, they start working the 50 MA. They induce buyers past it, but we know we're on a downtrend, right? From that fake move, start of the week, the averages still haven't crossed into an uptrend, so we're on a downtrend. They fake past it, throw a little railroad. Start of London right here, drop, right? So if you didn't catch this, you can just wait, because you know the downtrend might be over soon, right? So they make a multi-session W. Let me run down real quick. Right here, they cross the 200 and the 50. Okay, so we get that big multi-session W, right? After that long drop, the averages are crossed right here. Look, notice right here, the averages start separating. That means they're going to bounce back. Okay, so you get a multi-session W. I know a lot of people cut as soon as they hit the stops low right here. Look, out of Asian session, they worked the low. They didn't break the low of the week. They spiked past it. They hit our supply and demand zone right here, right? Spike it. Hit the stop losses of anybody who got it right. Rise. That was FOMC rise right here. Notice something right here. They fake past the 200 EMA. They're going to induce shorts now, right? We know if we came off a multi-session W, we know that they're going to want to induce shorts. So what do? They throw a railroad pattern above the 200 EMA. People take it short, and it just consolidates. So they just gather shorts. Straight away rise right here in Asian session. They hit the support and resistance band, bounce off of it, hit the stops low, fake past the 200 EMA. That's why I'm saying this is very powerful. So they fake past it, make a V bottom, and rise. But what I want you guys to realize when a new trend starts, when these averages cross, you're most likely already going into level 2. So we get on the weekly cycle, so we get a crossing of the 50 and the 200 right here. So I'm going to circle it with my ellipse tool to make sure I know I'm in an uptrend. Okay. Into London, if you have my shadow box indicator, the Rico shadow box, it'll paint right here. That's the London changeover. They fake past the 200 EMA. Look, retail traders, when they close, look, right here they broke it, closed underneath again, closed underneath again. People, retail traders, go short. Notice they do 3 candles. Remember the psychology of 3. Humans are stubborn, so they have to use the number 3 a lot in the markets. So 3 levels, 3 weekly levels, 3 pushes, etc., etc. Okay, right? So most of the time, they're going to fake past the 200 EMA on an uptrend. Same thing with a downtrend, they'll fake past it to induce people going the wrong way. So look, they're either going to do a V bottom, and you know you're on an uptrend, right, from the crossing and from that multi-session W. They're either going to do a W or a V bottom near this averages, right? Sometimes they'll break past it, and sometimes they'll just hover right above it. Okay, so they're either going to do a V bottom, V, or they'll just do a W. Reversal pattern, second leg, right? Just like I show you guys in my other videos. So that's what we're expecting. We know we're on an uptrend. We're going to wait for London session changeover to see if they stop punt. They did stop punt. However, they did not go below the Asian range. They only spiked barely past it just to hit any stop losses. V bottom, rise. Okay, notice right here, since this was a heavy uptrend, they consolidated right here, induce more shorts because they know they're going to go up. Make another V bottom, but notice something, it's at the 50 EMA and they use the first 8 hours as a support. See it? They went above the first 8 hours support and resistance, they went above it, consolidated it, come back, hit it, make a railroad pattern right at the 50 EMA. Okay? So, on the start of an uptrend, coming out of Asian, we already have the low of the week locked in. We're gonna wait for a stop hunt low. So we're either gonna wait for a V bottom formation near the 200 EMA, or we're gonna wait for a W, right? So one or the other, they're gonna do one or the other. And if they don't do this, it's harder to catch the straightaway rise, right? So most of the time, I think you guys are messing up because you guys are not waiting for the stop hunt. You guys are getting in too early, and you're not waiting for a stop hunt, and the stop hunt's what kills you. Okay, so they do a V bottom right here, Since this was a heavy uptrend, they do another V bottom in New York session. This was near the changeover, so New York market maker got on, saw there were some stop losses right here from the buyers, right? Look, where do people put their stop losses? Right under the candle, right? Look, see this consolidation zone? People put their stop losses right here, the buyers. Make sure to hit them. Rise. V bottom at the 50 EMA. So on a heavy uptrend, they're gonna fake past the 50 as well and make a V formation or a W formation to the 50, the aqua. So if they don't hit all the way to the male, that's what Steve Morrow calls it, right? The mayonnaise. The white is a 200 EMA. If they don't go all the way towards it, they'll probably just fake past the 50. So I hope that makes sense. We got a crossing. We're looking for buys. This should be pretty simple stuff for the people who are more experienced, but just showing you guys the moving averages. When the moving averages separate a lot, look, after this heavy rise, they haven't done any real stop hunts. A real stop hunt is around 25 to 50 pips below the Asian range. They did only small stop hunts, right? So we know after this crazy rise, the moving averages start separating a lot. See right here how they're really separated? Look, let me show you. Right here. See at this point right here how separated the moving averages are? The 50 and the 200, 15-minute chart. They're going to pull back. So look, let me show you. This is a mini cycle. I think NFP was a reset. We're going to right now explain. So, multi-session W. Next day, out of Asian session, we wait for the stop hunt. V bottom. So W, V. Consolidate, V, again at the 50, M, right here, M. That's why it dropped in Asian session. They're correcting the market before they rise after NFP, right? So, if you guys want to trade NFP, my advice is wait until the candle paints to see if they do a straightaway rise or a stop hunt. If they do a straightaway rise, you wait for the ADR to be filled. Maybe they passed the ADR and you're going to wait for an M formation. Let's say they do a straightaway rise. An NFP candle is just a straightaway rise. You're going to wait for the high to settle in, at least hold for 30 to 90 minutes, make an M formation, and you're going to take it short. Okay. So, and if they do a stop hunt, you're going to wait until the next candle paints of the. So you're going to wait for NFP to hit, and then the next candle, you're going to see how it paints. Okay. So this NFP. They made the M formation at the top, right? Dropped Asian, dropped London, and then NFP was the final spike. Notice something? This was a W. Even though it was a V bottom spike, they set the low in Asian session right here, look, and then they just consolidated above it. NFP was a spike below, closed a railroad pattern. That's a W pattern. That's a W formation. Double bottom, but it's really sloppy. The second leg extended below the low. Look, I'll show you. See it? See it? Let me erase all these lines. So, they had, after this crazy rise, they had to pull back to the averages, right? Because they're separated a lot. They had to pull back. Fake people going short. NFP broke the low that they set in London session. They consolidated above it. Notice something when they consolidated below the Asian range, they come back, fake past the 50 EMA. They try to get buyers because they know that they're going to spike it, NFP. So look, they stay underneath the 50. So people are going short. They give them profit, and then they get out of there quickly. Make sure to kill them quick. So they broke the low on NFP. Like I said, if you're going to trade NFP, wait till the candle paints. That's the safest way. Don't be in before NFP. They can either do a stop hunt or a straightaway. So you got to be very careful. So they do a W, right? An ugly W. Second leg broke below. Let's measure how much pips. It was 69 pips. Right here they broke below the Asian range for NFP was 68 pips. So our stop hunt box would have been here. I don't have them up, but I guarantee you the stop hunt box is right there to hit all the stop losses of the people who got it right, that know it's an uptrend. Also notice something, they fake past the 200 EMA. What did I say on an uptrend? They're going to fake below it and then rise, right? So they fake past the 200 EMA. They broke the low. People take shorts, right? Because they broke the low. So it's a breakout, right? That's what they think. But we know that they're just finishing their levels of drop. They're just finishing their levels of drop. but we know we're on a heavy uptrend, right, from that crossing of the 50 and the 200. So I hope that makes sense, guys. I hope that makes sense with the moving averages. So also, before I go, let me switch to the 1 hour chart. Notice something on the 1 hour chart. On Friday, at the very end of the day, they crossed them. So what does this mean if the 50 and the 200 cross on the 1 hour chart? It means we're probably going into a heavy uptrend long term. So what I expect them to do Monday morning, Sunday to Monday, is fake to the low, fake low, and then rise. Okay, probably hit one of these averages on the 1 hour chart or on the 15-minute chart. Most likely, I'm thinking Sunday they're gonna rise a little bit, and then London stop hunt low, probably to the 50, and then rise again. So this NFP might have been a reset. This was the only real stop hunt that we saw this week. So this is the only stop hunt that was 25 to 50 pips below the Asian range. It was 68 pips, 69 pips. So might have been a reset. So that's pretty much it, guys. The 50 and the 200 moving average, I'll repeat, once they cross, if the 50 is above, you're going to start looking for longs. If the 50 is below, you're going to look for shorts. But market structure always supersedes any indicator, right? So start of the week, false move, make an M formation drop, the averages didn't cross, you're still looking for shorts. You're waiting until London session before you take a short. Remember, don't be taking trades in Asian session unless you really know what you're doing, because most of the time they're going to stop hunt out of it, okay? So please, please, please wait until London session changeover if you're going to take a trade, okay? Wait for the changeovers, either London changeover or New York changeover, one or the other. If you're going to be trading Asian session, good luck with that. I don't do it, so you guys should follow my advice. Unless you have a lot of experience and can see the pattern really clearly, you want to wait until London changeover or New York changeover, right? So I hope that makes sense, guys. On an uptrend, they're going to fake past the 200 EMA or hover right above it and make a W or V formation coming out of Asian into London. On a downtrend, same thing. They're going to fake past the 200 to the upside. Let me scroll back. See, like right here, they're going to fake past the 200 to the upside, make an M formation, drop right on a downtrend. So depending on what they do out of Asian session is what I'm going to do to take my trade, right? So before I finish up, notice something. Let me erase all these lines right here, at least this one. Notice something about the start of the week, the first 8 hour support and resistance. By the end of the week, the euro closed around the same price point. So even though they killed all the traders, the economy wasn't really affected, if that makes sense. They started the week at this price point. By the end of the week, they're back at it. They're back almost at the same price point. So they killed all the traders, but the economy wasn't affected much. So that's it, guys. The 50 and the 200, very powerful moving averages if you know how to use them properly. Notice here on the 1 hour chart, before I go, make an M formation above the 200 as well. They crossed right here, heavy downtrend. Now they're crossing back up, heavy uptrend. So they're probably going to fake it on Sunday, Monday maybe, and keep going. So hope that helps, guys. Peace out.